If you're an entrepreneur and you're looking for a new task to tackle, I would like to introduce you to day trading futures. Everything you need as a beginner and the advantages. It's something you can do over a LLC, that means a business license, or you can do it also as private person. But of course, doing it over a business license brings many advantages, such as if you do courses, coachings, your trading platform. These all things, they cost money, even your trading losses, and you can put it to your tax, what is very cool, and take it to the next year. That means if you make money, you can calculate with the things you spend. The other good thing is that when you make trading over your business license is that everything you do is first on a pool. That means you only pay a certain amount of tax that it's in the company, you pay less tax. And first, of course, if you would pay it out, this is where you pay then the income tax. And you can use the money that is over to have more leverage in your trading. To understand day trading is important. I will open Paint here and I'm going to show you also some stuff with my trading platform here. And I hope maybe this is a way that you want to invest your time with, because day trading is when you're Central, Eastern or Western time. It's going to start 9 a.m. and to 4 p.m. and you can select anywhere 1 or 2 hours. The advantage of day trading futures is the money management to other assets. And you don't need to have $250,000 or $500,000 that you put in the pool that you can lose at once. So in this case, from 9 a.m. to 4 p.m., if you have 1 or 2 hours, and we're talking about that Monday to Friday because it's on working days, we have the market that is called the S&P 500 future, S&P 500 future. In the future market on trading platforms, it's called the ES. It's just a symbol name, and usually on trading platforms, US 500, or in this case, it says the ES set because it's the futures. The future market has always every 4 months in this case because it's the S&P 500 future. A new market where the market is rolling, it's called. There's always a new market we can trade because it's always changing where markets are, where people are trading their old contract and they go always into the new contract. And to tell you that is, it shows you just that this market is moving always up and down. And we're talking about $200 moves, 5 times an hour in average, what is absolutely insane. That means when just having a $3,000 or $7,000 account, we can play with the money management to adjust $100 a trade, what is really awesome, and to aim for $500 for each trade that works. So in the money management, you don't need to win every time. All you need to do is to win sometime and still be able to start making money. I will show you some results here inside from some trading students, and you can see how much money they lost, how much money they made, and then in total, how much money at the bottom, this violet number. This is the money they made within a week or within a month using first a $3,000, $7,000 account. And the cool thing is you can start off by using a not real money account. This is something what is very important. First, trading with a demo account. So the advantage is literally you can trade at home. You can trade from anywhere actually. All you need is just a laptop, or you can just have an office where you just have 1 or 2 monitors and your computer, internet, and then you can just start trading there. And trading is just that you see the market. That means in this case, you have the market. You see that the market is going up. That means now when buying and the market continues to go up, you can calculate how much you want to buy with a $3,000, $7,000 account. This could be a $500 or $3,000 move. Yes, this trading account could be duplicated. The dangerous thing is just that we're not having a proper trading strategy that we can break our full trading account because we can buy and sell. If we buy or sell and the market goes in our direction, that means buying, the market goes up. Selling, the market goes down, we make money. But if the market goes against us, we lose money. It means if this is a $3,000 move by buying, for example, by pressing on the buying button 1 time, for example, because each time you press on the buying button, this is the more quantity in units you buy. It means for 1 unit, this could be $3,000. For 2 units, it could be $6,000. For each unit to trade, usually there's an average of $500 we need to have on the account. And the rest, that means if it's a $3,000, $5,000, $7,000 account, the rest is just the money to lose that we use. Actually, we call it, I call it lose, but it's literally just to invest actually to get more money out. In trading, it works that maybe losing 5 times $100 in a row and somewhere making $500 to $900 with 1 single winning trade. And this is not gambling because you have a clear advantage in money management. and of course, how the market is running in one direction. When you see that the market is going for 2 or 3 hours just in one direction, we can assume at least the next 30 minutes or 15 minutes that the market continues going in that direction by seeing it over and over again. It will not happen every day and it will not happen every week, but when we sit down on a computer for 5 weeks, 3 times a week, 2 times a week for just 1 hour, what is totally enough, you will have enough trading opportunities and see that it makes sense that the market goes in one direction. That means when we see the market is going up, if we buy this, I'm going to make a very big example here in drawing, and I hope that you can understand this so good as possible. Let me know in the comment section if this is like on your knowledge level, if you understood this, and you can see how the structure here goes up here, for example, a bit, like here it just goes higher. And now the thing is, when buying now, we have something that is called a stop loss. That means we buy, we have an entry place, we have a stop loss, and then we also have a take profit, it's called. And when buying so much, we can adjust from here to here that this is $100 on average. That means if the market goes against us with this length, this would be $100. Like here will be $100 loss. But if the market goes the same length up, this will be $100. This will be $200. It will be $300 then. $300 up here, trading here. And this is how money management works, working always with a stop loss. It's always made out of a stop loss. It's always the entry. We have then our take profit, it's called. This is our target. And we have also the position size. That means the unit. You mostly find this in a trading account on the right side, the units we trade with. To get the money management down, what I'm just explaining is always in between from entry to stop loss and units. That's how you do it. Like you have your buy button, you have a selling button, unit, how many you want to buy, like 1 to 10, for example. And then you adjust it with the entry and the stop placement as I explained it. It means if the market goes against us and we buy, we lose $100 on average. But if the market goes in our direction, we make $500, $700 on average. Now, how to get first a demo account to get started? There's a trading platform. It's called ZeroChart. ZeroChart is a very good trading platform. It's just a very complicated start in the beginning. And I would really recommend to you is first, if you're not that techy, it will be first to use TradingView. If you are interested in a ZeroChart tutorial for beginners that you can trade on a demo account, they have a 40-day trial period. It costs like $25-ish, maximum $50 using a real money account. Let me know in the comment section if you're interested in ZeroChart. But when you use TradingView, just select the 1-minute chart. Just type in here US 500 first. If you want to trade the real market, what I think is better, because there are many replicated markets here inside. It's even an legal financial product, but I think a replicated market is not that good to trade than just like a real future. That means going here to trading panel, attaching here the paper trading as you see here, and then just we need to pay here, I think it's $7 or something a month for data. And we need to pay the essential or like the lowest subscription here. Then we can trade here the ES1 exclamation mark. But if you want to have it totally for free in the beginning, you can do here the US 500. It says here on the right side, capital.com or Pepperstone. And then it says here trade, for example. And now here you can play with units. You can play here with US dollar in risk. You can say like you want to adjust $100 with stop loss, units. And so units, as I said, money management, stop loss, and entry market. So you can say like $100 you want to adjust, and then you have here sell or buy. And now you can play, for example, with the trading platform using the 1-minute chart. Very important is to trade between 9 a.m. and 4 p.m. and to find there literally just to look how the market is running and just to do first entry and exits, just like to figure out how you like day trading futures. It's something that is really awesome because you can do it from home, literally from anywhere. So when being more experienced, there are more better tools to have more informations. Tools like a heat map, it's called. A heat map can help you. I'm going to show you this one here because I'm currently making this video in the pre-session. A heat map can help you to see where people wants to buy and sell passively. That means here, for example, you can find a 140. That means somebody wants to sell up here. And down here, you can find a 126, 110, 115. That means down here, you can see more orange lines down here than up here. And this is what the market is aiming at. It's just somebody who's just like saying, hello, I'm here and I want to buy 115, 110, 126. And then the market is running to these points when the market is nearby. And usually when looking to the left, you can see here, this is called a low. you can find here a bigger structured low here. A low is just like when you can see that the market is spiking down. That means looks like this, looks like that, right? So this is the low here, and this is what the market is aiming at. And when I'm looking here to the heat map, you find that the orange lines are just nearby where this low is. And this is liquidity, what you may have heard or read before with books. Let me know in the comment section if you ever have heard about liquidity, or if you don't know what liquidity is, so I know if I should make a video about what liquidity is. Okay, so we have here a 30-minute chart, and you can see here different kind of VWAPs. This is the volume weighted average price. And very often you find there liquidity. That means you find there a lot of high limit orders where the market is aiming at, and then the market is either going to wiggle around here a lot, or it's going to be the night. That means the market is running against it. That means going down here, popping up, going down here, popping down, or staying here, being in a consolidation phase. That means making lots of candles. Another tool, what is really awesome, this is the footprint chart. As I said here, the 140 is up here, as you see here. But then we have two limit orders down here. We don't see this right now with the platform because it's not that big. But you can see them here, 116, 106, and 125 at a 3-day VWAP, volume weighted average price. Just like average price within the last 3 days in average, right? And you can see and look in these candles with Zero chart, what is awesome. And you can see the numbers, like how much is being traded in sell and buy, what are moving the market. You have always a passive side, also called limit orders, and you have an active side, what is called the market orders. So this can help us to see more in depth with the market. But can this help us with our trading? And I think in the beginning, when starting your career in day trading, I think this is something what can take like 6 months, 7 months of learning first, with just understanding what this is. So what is literally better, I think, is to start with the candle-based trading strategy, because there are always 3 things that are the most important thing when it comes to day trading. The first at all is that you have a clear trading strategy that gives you a clear setup. That means you want to have quantity of setups based on your time management. That means if you trade for 8 hours within a month, let's say around 1 hour, Monday to Friday, 3 days within a week. Then each time when you trade for 1 hour between 9 a.m. and 4 p.m., you want to have enough trading opportunities. I'm going to show you an example how to have 20, 30, 40 trading opportunities. You can find here, for example, a participant. We do also something like an Excel sheet, because it's like, if you don't track, you don't care. It's a saying. I think I really like this one. You can see here within 1 week, this trader here had 13 trading opportunities and traded 6 of them, lost $200 and made $900. As you see here, $700 was what the person was made here. And then what is very important is the person had 3 winning trades and 2 losing trades. That means 6 trades the person took, but there were 13 other trades the person had opportunities also to take, and was just writing it down in an Excel sheet so I could talk with the trader about it, in value of $4,500 with $400 losing trades, as you see here. Those are just opportunities. And the first key point is to have enough trading opportunities if you trade for 8 hours. That means here you can see the trader trades between 9 a.m. and 11:45, 6 p.m. and 8 p.m. Very important is this person is from Germany. If you're from the US, it's going to be 9 a.m. to 4 p.m.-ish. In our country, it's 4 p.m. to 10 p.m., for example. But you can see here between 4 p.m. and 10 p.m. This is 9 a.m. to 10 a.m. This is around like 11 a.m. to 12 a.m.-ish. So you see like 1-2 hours are totally fine. Sometimes it's 1.5 hour, or sometimes those are 2 hours, maximum 3 hours at a time. And if you sit down here for example, you can see here 23, 24, 25, 26 for 5 times a week for 2 hours or 1.5 hours. It's important to write down how many times did we saw here the color switch. As you see here color switches. That means just a tiny red and a green, or green and a red candle, that you have clear focus on something. The second leverage is, the second thing what is very important when it comes to day trading is that if you see the quantity, that means 30, 40, 50 trading opportunities if you would trade for a month. This is just a week what you see here, and we're talking here about 18 trading opportunities already. Then the second leverage is also the risk-reward ratio. How much money can I use? Like how many shots do I have? Do I have 30, 40 shots to adjust $100, for example, And then when we have good trades, how much money can we make? It would be good to have an average of 5. That means making $500 on average. That means maybe adjusting in the practical side $75 to make $400, or to adjust $50 to make $250 on average. This is the money management. And the third one is with trading pictures. I'm going to show you an example here that looks like this. That means to take notes and just to figure out which of these trades are good, starting out first with candles. That means when we have here a red and a green candle and we enter the trade after a green candle, stop placement on the color switch or on the lowest part here, adjusting $100 with the unit, with the stop placement and the entry so tight as possible. And then aiming for our reference high here, as you see here or there, and then shooting up with the trades. That's something. Those are the 3 things. We cannot just track our trading only over an Excel sheet. We need always to combine that with Excel sheet and picture how I showed you. And when having now 40, 50, 60, 70 trading opportunities, to adjust $100 to make $500. And the third leverage, if you have pictures of how you were trading, how the day was looking, if it was more flat, if it was more a trending day, for example, then I think it beats everything. It beats even having better tools and trading first, because this is on the money making activity side, the most efficient thing. And then when having experience with that, then volume, for example, can help literally to see directions better. What I see a lot in trading is sadly that we have traders, they learn a lot, for example, these tools, and then they don't go into trading with real money. If it's even just $10 or $30, I think it's always better to learn how to trade with $30 or up to $80 or $100 a trade. And if that criteria is met and the trader is profitable, then I think these tools can literally improve someone's trading.